Aya, you heard what Mike had to say. He actually made the point in the story that, yeah, Bitcoin, as an example, up 60% year to date, around 27,000 US dollars per token, nowhere near 69,000 US dollars per token. This idea that a lot of these digital currencies will be in place of or alongside traditional currency hasn't quite happened. Based on everything you just heard, what do you think?
I think it's important to really separate the difference between the appreciation and depreciation of these currencies and the actual underlying technology that's being built here that, for example, we're working on, but also a number of players, especially after what happened with FTX in November. And I think it really emphasized the need for transparency, better capital efficiency, collateral management, and operational overhead that the blockchain technology just naturally is a better fit for. And I think that that has really shown clear in the adoption of some of those infrastructure providers. Even if you look at, going back to price action, if you look at, for example, MakerDAO with the Maker token appreciating 45% in the last 30 days, relative to them being able to successfully bring on tokenized treasuries on chain for DAI holders to get access to. You've seen other forms of technology just being better for different forms of settlement, whether it's between bonds, FX, repo markets. Circle just announced that they are publishing or pushing out a credit protocol which will basically have repos on chain. And so I think the technology, it takes time for you to build these things long term, but it's there and it's there to stay. There's no doubt we're in a bear market, but we're not going anywhere.
Do you think, is institutional money still interested? I mean, we heard the anecdotal evidence of some people getting frustrated around their dinner table, but that doesn't speak to the fact that outside of their dinner table, they might still be able to be striking deals with really big players from names that we at Bloomberg know more of.
Absolutely. I think it's fair to say that all of the large banks, both in the United States and globally, have a digital asset strategy right now, and they're all focusing on the underlying technology and how it helps with operational overhead for these banks who have teams of 1,000+ people working on these specific issues where it's not capital efficient and it's very expensive. And I think specific to these institutional investors, they're staying in the space. The numbers have decreased in terms of new allocation into the space, but that doesn't discredit all of the money that has already been placed in the industry and all of the work that's being done to build these new technologies.
You just used the word discredit, and I think that was like the really gut punch to everyone was that Sam Bankman-Fried discredited an ecosystem that people were already trying to find their comfort levels with. Do you think in a way the trial next week will help clear that air and make out that, look, he was doing what you could do in any industry? Or do you think it will re-engulf the whole crypto world in the worry that SEC Chair Gary Gensler has?
I think a little bit of both. I think the industry is very ready to close this chapter, move on, and I think that we are going to revisit a lot of the pain and trauma that a lot of these funds and many players in this space had to deal with in November of last year that led into, almost a year from now. That said, and you'll see headlines on it, I'm sure Gary Gensler will reference it in addition to push and delay the Bitcoin ETF. That said, there are still rumors that the Ethereum ETF may get published in as soon as October, so next week. And so that, I think there's good news in the bad news. And again, SBF is just a person. He's a human being that doesn't, again, to your point, it shouldn't discredit the underlying technology. And if anything, it should emphasize that we should put more trust into the technology versus the people managing them.
A number of industry leaders and participants have been on the program with us, basically outlining what they see as a U.S. administration and federal government that is not supportive of the industry broadly, so they're being pushed offshore. Do you recognize that as a trend or a theme?
I think there is no doubt about the fact that currently, if you go to geographies like Singapore, Hong Kong, and Southeast Asia, the risk aversion is much higher, and there's higher appetite for crypto, especially with there being clear regulatory standards for how to operate a business in these jurisdictions. That said, again, referencing this Ethereum ETF, if we do get guidelines for that in the next month, I think that will really change the tone of the conversations that are happening in the United States. And you're starting to see that already with just markets. Overall implied volatility in Ethereum is up this week, with institutions institutions trading around that potential rumor of the ETF approval. And you're seeing that this week was actually a very big call option buy for institutional investors. And so that's really exciting as we look into Q4.
Let's end on a positive note. It's Friday. There does seem now to be potential for a lot to be approved, a lot to happen. The question that the market keeps asking is, do regulators approve all of these proposed products all at once so that they have a fair footing, or do they stagger them? And I wondered if you had an opinion on that.
From my perspective, it has to be all at once. You really shouldn't be favoring different products in the market. And I think that's probably one of the reasons that you're waiting to get all of these approvals in. Whether they choose to stagger or approve them, either way will be really good reflection for the market at large, and will mean that institutions who are comfortable trading through their counterparties, whether it's banks or asset managers, will finally be able to access this underlying asset class, which has outperformed the market year to date.